Hey there, good morning, everyone. Okay, so today there's a lot on the large cap scanner, and there's a lot of red. So I picked out, DraftKings actually just popped up, and this is one that I have on watch like all the time. I'll go over that in a minute. I haven't looked at that one yet today. It broke into new all-time highs recently and has taken a dip since then. But I'll go over TCOM here, and then SPLK are the large caps that I'm watching today. It looks like there are probably, I don't know, I'd guess 30 or so stocks on the large cap scanner today. And of the roughly 30 stocks that are on the scanner, there are 4 stocks that are green. The rest of everything is red. And I will short from time to time. I just don't like to short when when I short a stock, it's because I've been watching it for a long time, and there's a really solid short pattern setting up. Otherwise, I prefer to be long. So the first thing on the docket today is TCOM. So with TCOM here, there's a gap from way back here of roughly May of 2019. And this gap hasn't been filled yet. The bottom of the gap here is $42.16, and the top of the gap is $43.20. I don't know if it's in play today or not. You can see recently here on, the 21st of February this year, or the 23rd of February this year, it made a run for the bottom of the gap, but fell short by about $1. So the gap, what I like to see on gaps is I like to see a stock come up over the gap, test the top of the gap, and then take off. That's very bullish. It's an easy thing to trade. It's easy to manage risk. It's easy to recognize. Easy trade. Well, so today now it's popping up pre-market, and it's at $41.50 pre-market, which represents where is it? TCOM, actually I've got it right here. So TCOM pre-bell is up 4.27%. So I took a Fibonacci and I put it at the top of the close right here, the close from the 23rd. And then, and by the way, the catalyst is earnings. So real quick before I go any further, there's a surprise earnings of 530% earnings surprise. So there's a catalyst for this thing to be going up. Now, one quarter doesn't make a trend. It just might be worth a trade, and that's about it. So the levels I have for an entry are 40.96 and 40.56. So I will be putting probably 100 shares on 40.96 and then 300 shares on 40.56, and here's my Fibonacci for that. I ran the Fibonacci from the top of this candle to the bottom, to the low of this day on the 26th of February, just a few days ago. So it's not, and the reason I ran it to the top of this candle, because pre-market action was as high, pre-market action was as high as 41.88, and the top of the candle from the 23rd is a high of 41.85. I'm sorry, not 41.85. The open is 41.70. So it's kind of ballpark. There's nothing really exact about. Usually I have numbers that are a bit more exact. today, 40.96 and 40.56 are going to be ballpark numbers for an entry. And I'm looking for a move, looking for it to come down, possibly spike as low as 40.56 and then take off in the other direction. And I'm looking for it to at least test the bottom of the gap. Now, if the stock doesn't go down to my prices at all, and then it goes into the bottom of the gap, I'm looking for it to move above the bottom, and then above the top of the gap. And this trade, it's probably going to be a multi-day trade. If I were to keep a watch on this, I might keep a watch on it. We'll see. Basically, it could take a few days instead of it just doing it all in one day to come up above the gap, test the gap, and then move away again. So a dip down after it gets a 4% boost on good earnings, a dip down here to 40.96 or 40.56 or so, and then a move up is what I'm looking for really today. I think that's the most likely scenario. If there's anything more to it, it's just a bonus. So it's just sort of an awareness of what's possible, I suppose, with this gap up here. These two lines represent the gap, and these two lines just represent support for the move up that it's experiencing today. All right, so now next up is SPLK, and I really don't have. This is just another one of the very few stocks that are up today pre-market. And I really don't know what levels to watch here. There's a gigantic gap from 202 down to 168 here. It's getting close to the bottom of this sort of move after it gapped down. I don't see a trade here. Maybe something will develop during the day. You can see here pre-market 22,000 shares were traded right here on this big red candle right here. I don't know what to make of it. It's on watch. If something develops there, then I will move over to it. SVBI, this is interesting. This stock, it's a bank. It just recently merged with Shore Bank in Maryland to make it the third largest bank. Let's see. Shore Bank shares, Severn Bank Corp. Report execution of merger agreement creates third largest bank headquartered in Maryland. Okay. So, it's up pre-market 29%. It's merger and acquisition in financial arena, which as the 10-year continues to creep up, the financials will do well. And the 10-year is still creeping up a tad. It's up 1 basis point today. Then let's see what else. AESE. This is one that popped up to as high as $4 pre-market. They sold. So okay, Allied Esports to sell poker brand World Poker Tour for $78 million. Explores strategic alternatives for esports business. There's a catalyst. Momentum trades. They've been. I'd trade momentum, small cap momentum, probably 2, maybe 3 times a week. And I've gotten very selective with small cap momentum because it can just rob you blind. When small cap momentum is in play, and it seems to come in seasons, then there's a lot of money to be made there. But otherwise, it's just their bull traps. And I got stuck in a bull trap yesterday, that's for sure. So I've got TCOM, SPLK, SVBI, and AESE on watch today. The broader markets here, let's take a look at the SPY. And on the daily, it's I mean, it's looking like it's ready to roll over. You can see here this sort of consolidation pattern right here. The general trend is still bullish. However, this right here kind of looks like it's getting ready to roll over to the downside. So that's just the way it looks. There's nothing scientific about that. The VIX is still elevated. We're 4% away from all-time highs, and the VIX is nowhere near all-time lows. All-time lows are down around 12 on the VIX, and we're sitting 100% on the VIX. We're sitting 100% above that. I like to think, instead of thinking of corrections as there being sectors that are overvalued, or I don't think of corrections as being sort of like, this is the wrong price. Well, obviously, I mean, that's true. When something is selling off and it's getting cheaper, then it wasn't valued correctly. But I think of it more of along the lines of correcting your cash positions or your investments. So if I want to go and correct my portfolio, it's because I'm going to rotate into sectors and industries that are more suitable for the economic conditions. So we are in shifting economic conditions. I think things are getting, the economy is starting to open up again. Rates are going up, which is tough on tech and small caps. And so moving money from one place to another just kind of causes this. It's not necessarily bearish. It's just, think of it instead of, valuations, instead of thinking of things as, oh, this is overvalued, this is that. Think of it more in terms of where people are putting their cash. And so if I want to make a correction in my portfolio, it's not because, I'm getting out of something because I think it's overvalued. I'm getting out of something because it's not going to perform as well as another stock in another sector. So the market, it looks like we're going through a correction process where big money is reallocating its resources, and cash is a position too. So there are a lot of asset managers who are like, well, let's see how it shakes out. I'll just go to cash, and I'll wait and see what this thing is doing. The dollar right now is strengthening. I think it's a minor uptrend in a more of a bull or more of a bear trend for the dollar. But for the time being, cash is a position. And so I think that there are a lot of people who are correcting their positions. They're like, well, let's see, how all this shakes out. Inflation is on the horizon. What's that going to do to yields? People, the TLT is selling off as the long end of the yield range, long end of the bond curve steepens. That's good for financials. So there's a lot of people kind of get stuck on correction as being, oh, it's things are overvalued, but it's not really the case. It's more a correction in being in the right spot, so that when the right time comes, you've invested in, let's say, RKDA. This is a little stock that I averaged into at around $3, right in this area right here, roughly $3, and all of a sudden it pops. And I'm about to do it again. I'm about to start averaging into RKDA again, and so. I don't know. Is it a correction? Are things overvalued? I don't know. But are things, are there better places to put cash than, where I have them right now, or, rather than being in cash? Yeah, it's almost always true. So, okay, everybody, that's going to be the pre-market workup for the day. It's about 9:05. I've got TCOM here Looking for support between 40.96 and 40.56. If it gives me the opportunity, I'll be in it. SPLK, I have actually just no idea what this thing is going to do today. I suppose if it breaks above pre-market, then perhaps I'll look for an entry. I really don't know. I'll have to just kind of look at it and kind of decide at the time. SVBI, this is one that I have on watch. This could be a momentum trade. We'll see. It's going to depend on the 1 minute time frame. And then AESE, again, another momentum trade. I'm not real big on momentum right now because I took such a spanking yesterday on a momentum play. That's a bias, and I might just need to ignore it and put it to the side and trade on. So that's what I have going on today. And good luck out there, everybody. I will see you at the recap. Out.